Welcome to Alpha Recap, your aftermarket rundown from stockalpha.ai. Markets closed May 29th on a mixed but broadly constructive note, and we've got contracts, AI deals, big financings, and some legal drama to unpack. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Lots to cover. Project wins and momentum in places you might expect, and plenty of risk where clarity is missing. So, what really stands out here is the contrast between cash flow visibility and headline risk.
Totally. Quick preview: tech, energy, and utilities led the winners, thanks to tangible projects and AI deal flow, while crypto and cannabis were under pressure because of legal and regulatory noise.
Right. And the other thing is the financing activity we saw. Big refinancings and M&A that show selective liquidity in certain assets.
Let's start with technology, because that was a marquee day, and the SpaceX story was a headline grabber. The company secured about $4.16 billion in contract wins, and that kind of confirmation of multi-year revenue really moved the tape. I mean, when you step back and look at this, a big government or large contract does more than lift one stock. It lifts suppliers, satellite communications infrastructure, and anyone tied to long-dated backlog.
Absolutely. And on top of that, we saw enterprise AI deals and a string of product launches that kept capital rotating into AI-exposed names. Analysts note that momentum tends to concentrate where you can actually see the cash flow pipeline.
Okta came through with a positive revenue beat, and that fed the narrative. So technology finished the day with real headline support.
Yeah, that tracks.
Energy and utilities also stood out. We saw new LNG contracts and renewed momentum in EV charging, rooftop solar and storage projects, plus state funding moves that helped utilities project visibility.
And the storage theme is important. When battery tech gets acquired and projects become more bankable, utilities can plan long-term CapEx with less execution risk. That pushes investors toward those names in the short run.
Exactly. Materials and industrials were mixed but constructive. Lithium signals, recycling tech, and robotics deals showed that the supply chain for electrification and AI-driven automation is getting real capital.
For example, Boston Metal raised about $75 million, a clear sign that capital is flowing to advanced materials and circularity plays.
Short reaction.
Noted.
Real estate produced some big balance sheet headlines. A refinancing at Hudson Yards for about $1.4 billion, and CoStar's roughly $800 million Zonda acquisition.
Those are high-profile deals that say the credit markets are willing to underwrite certain trophy assets and strategic purchases. But the broader CRE story is still uneven.
Right. Pockets of liquidity versus dispersion across property types. Finance and consumer were mixed. Some ETFs and areas hit new highs, but retail results were a mixed bag.
Healthcare had a few bright spots too. New antibiotic design headlines, a big pledge in Singapore for precision medicine, and some APAC partnerships in oncology. But reimbursement and regulatory rules still loom as risks.
Now for the tougher side of the tape: crypto and cannabis. Both groups had some wins on infrastructure, but finished the day under pressure because legal and enforcement headlines dominated sentiment.
Paxos got a clearing agency registration, and Coinbase received an important CFTC approval to route customers. These are plumbing wins. But analysts note ongoing enforcement and debates over stablecoin yields kept the sector volatile.
And cannabis ran into legal pushback on federal rescheduling efforts, even as states moved ahead. So the policy tug-of-war created headline risk that traders priced in.
Short reaction.
Got it. Let's go through the day's most significant moves and why they mattered, one by one.
First up, SpaceX's contract. A confirmed deal on the scale of about $4.16 billion expands its backlog and validates private capital allocation into space infrastructure, which ripples out to suppliers and satellite data services.
Second, utilities and storage. State funding and active M&A in battery tech improve bankability for storage projects, which reduces perceived policy and execution risk. That gave utilities a clearer cash flow line of sight.
Third, the Hudson Yards refi and CoStar's Zonda purchase. Those show lenders will underwrite big, strategic CRE deals, even while smaller or more leveraged properties face tighter conditions.
Fourth, the crypto plumbing wins. Paxos's registration and Coinbase's approvals changed the operational landscape, but didn't erase the enforcement overhang.
Fifth, industrial capital raises like Boston Metal's $75 million round. That signals investor interest in solving mid-cycle material bottlenecks through new tech and recycling.
And finally, operational risk. Blue Origin had a setback, and a federal judge's order touched the Kennedy Center renovations. Those reminded the market that operational incidents and legal rulings can reprice discretionary or space-adjacent names fast.
Right, short reaction.
Yep.
So what really stands out here is the cross-sector linkages.
Let's spell out the cross-cutting narratives. 1. AI as a tailwind across sectors. We saw direct AI deal flow in tech, plus robotics and physical AI in industrials and manufacturing. When defense or space deals increase data capacity, that also supports AI infrastructure.
2. The electrification supply chain. Battery storage, EV demand, lithium signals, and recycling tech connect utilities, energy, materials, and industrials. But a critical minerals report flagged downstream choke points that could slow rollouts.
3. Contract visibility versus regulatory uncertainty. Sectors with visible, contracted cash flows, think long-dated energy deals and defense contracts, outperform those where cash is more uncertain, like cannabis and parts of crypto.
4. Financing and balance sheet rotation. Big financings, Hudson Yards, CoStar, and even an IPO plan for INEO near around $20.3 billion are showing selective liquidity that underpins M&A and strategic moves.
And 5. Enforcement and legal headlines as volatility drivers. Crypto and cannabis proved sensitive to court dockets and agency actions. Legal outcomes were a primary driver of near-term returns.
Short reaction.
Yep, agreed.
Okay, now some actionable insights for listeners. Informational only, not advice.
First, prioritize clarity of cash flows and contract backlog. Data suggests capital is rotating to names with booked revenue and strong counterparties, and analysts note those names often trade with lower volatility.
Second, track the battery and materials chain end to end. Watch lithium production guidance, recycling pilot scale-ups, and announcements of downstream processing capacity, because those are potential bottlenecks for electrification.
Third, treat regulatory and legal headlines as primary risk factors for crypto and cannabis. Infrastructure wins matter, but enforcement and court timelines can change the landscape quickly.
Fourth, use financing activity to gauge liquidity within real estate and leveraged sectors. High-profile deals point to pockets of credit willingness, but spreads and covenant structures remain important to watch.
Fifth, watch AI deal flow as a cross-sector leading indicator. If enterprise pilots convert to deployments and renewal rates look strong, that lowers adoption risk over time.
And finally, expect dispersion in consumer and communications. Logistics and margin levers matter more than broad thematic bets here.
Let's be clear about the risks that could flip the tape quickly. Regulatory outcomes in crypto and cannabis. Supply chain choke points for critical minerals. Macro shocks that widen credit spreads. And operational incidents in aerospace or storage.
Analysts note those are real catalysts. Court dockets and agency guidance are especially important in the near term.
Looking forward over the next 1 to 3 months, expect continued rotation into sectors with visible project pipelines, selected tech infra, utilities with approved storage, and energy firms with contracted builds. But regulatory calendars could dominate headlines, particularly in crypto and cannabis.
Over 3 to 12 months, if AI deployments produce measurable productivity gains across industrials and enterprise software, multiples could reprice to reflect that durable growth. And if battery and recycling capacities scale with offtake, that could ease material tightness.
Big takeaway: the market is bifurcated. Where you can see multi-year contracts and real adoption, capital is flowing. Where outcomes depend on regulatory clarity or discretionary spend, volatility is higher and selection matters more than broad sector bets.
Honestly, I was a bit surprised by how pronounced the financing signals were. Big strategic financings really changed the tone in real estate and parts of industrials.
Me too. Final 3 clear takeaways before we sign off. 1. Prioritize names with visible cash flows and contract backlog. 2. Watch the battery to AI value chains end to end because they link multiple sectors. 3. Treat regulatory and legal calendars as immediate risk factors for crypto, cannabis, and parts of communications and consumer.
And a reminder, this is for informational purposes only. We are not offering personalized investment advice or recommending buying, selling, or holding any specific security. Analysts note that market conditions can change quickly, and listeners should consult their own advisors.
That wraps up today's recap. If you have questions about anything we covered, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai and send us your questions through the Q&A feature.
Thanks for listening. See you next time on Alpha Recap.
Bye, everyone.